Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Wolf Richter, publisher of WolfStreet.com. He's speaking to us from San Francisco. Welcome back to the show, Wolf.
Thanks for having me back, Jim.
Well, for many companies, work from home has become the norm during the pandemic. Now that economies are starting to open up, are people going back to the office? And how does that impact the office sector of commercial real estate?
Yeah, so we expected there to be a slow return to the office after the economy opened up. And at first we saw a little bit of it, but that's now turned around. And so what's happened is that a company called Castle Systems provides access systems to office buildings, so key fobs and access cards and apps and so forth to get into office buildings, and so they can track how many people are actually going into office buildings, and can compare that to the levels that were taking place in February. And so before the COVID era. And what has happened is that as soon as the lockdown started, office, and even before then, office attendance started plunging. And at the low point and it's different levels in different cities, but on average at the low point, it was down something like 90%. And in some cities, like in New York City, it was down close to 100%. I mean, it was in the upper 90%. In other cities such as Dallas or Los Angeles, it was down maybe 80%, 85%, somewhere in that range. And so that was in early April. And then gradually, office attendance started picking up. People started going back to the office. And about a month ago, a few weeks ago, we started getting the data on the new outbreaks in the southern part of the United States. So in Florida and Texas and Southern California and Arizona and those places. And by mid-June, the average office attendance had ticked up to, it was still down like 80%, 75%. And then we got these outbreaks coming along, and suddenly the areas that were hit the hardest by them, so this is Dallas, Houston, the whole Southern California area, especially Los Angeles, office attendance started dropping again. And so over the past 4 weeks, it's actually gone down, even though in New York City, for example, the office attendance went up a little bit because they're coming out of their situation. And they don't have a new outbreak yet, so the people are going back to the office, but it's just a very small number. So New York City is still down about 90%. So this is taking a very, very long time, and it's now backtracking. And the reason why this can happen is because not that people aren't working, they're all working. They're working at home, and this has turned out to be a fairly effective thing. And that not all jobs can be done at home, and not all jobs can be done at home all the time. But most of these office jobs can be done at least partially at home. And some of those jobs, many of those jobs can be done at home 100%. And so companies and employees have figured out how to do that. They've gotten the equipment that's necessary. They've set up the little thing at home. And they're doing Zoom meetings, and they're trying to get used to all this. And for we've heard reporting from some companies that productivity has actually gone up. Other companies have reported that productivity has dropped a little bit. So the jury is still out whether this is working, and it may be different for different companies. But this looks like to be a very functional thing now. And so we know that. So now we know that this is working, for some companies better than for others, and for some jobs better than for others. But it's working. You don't have to go back to the office for many of these jobs, or you don't have to go back every day. And so now the question is, will this survive after the pandemic? And this is a trend that's going to have huge implications for cities. If it turns out that, so right now maybe 75% of the people are not going to the office. So if it turns out that when the pandemic is over, that this is 25% of the people that now go to the office don't have to go there anymore, don't go, or only go some of the time. Yeah, so you have a drop off in traffic of 25% of the office employees. So that's traffic by car, it's traffic by transportation systems in general, parking, office buildings, office space. The little shops around the offices, the shops and restaurants and cafes that support these people when they go out for lunch or whatever they do after dinner. And so if this is a trend that sticks around, and if it's only 25% of the people don't have to go back to the office, this will have huge implications. And it's not just work from home, it's really work from anywhere at that point. And you don't really have to live close to the office. You could live, in theory, you could live in another state, or you can live halfway across the country. You might have to commute to the city, to the office once a month to go to a meeting, or if you have to commute maybe once a week, you don't want to live that far away, but you can live, a 4-hour drive once or twice a month. That's not too bad considering that people are spending 2 hours now driving every day. So this will rearrange how we do things. And, a lot of people have said about e-commerce, 20 years ago, it will never take off. People will never buy shoes and clothes and used cars online. And, they'll never buy any of these things online. And now they're buying all these things online. And it has changed the brick and mortar retail situation. It has changed how used cars are sold. It has changed everything, it just took a long time. Now, the pandemic has really squeezed the work from home trend into a very short period of time, and companies and people were forced to make it work. And now we know it's working, and that's a dangerous knowledge to have. So now companies realize, okay, we don't really have to spend all this money on office space. We can do with less. Still need an office, but we don't need as much. We can rotate people in and out. We don't need room for 10,000 people. We only need a room for 2,000 people or 3,000 people at one point. And we don't need to travel to go see people. We can do that online, at least part of the time, maybe not all the time, but we can cut out a bunch of the business trips. So these things change the way business is being conducted, and it changes the way companies that support these businesses, and that includes landlords, and it includes shops and restaurants and so forth, how they're being dealt with during this change. And I think we will see a dramatic amount of turmoil in office commercial real estate sector. There's already, I'm here in San Francisco, there's already a huge amount of vacant office space on the market. A lot of it is now sublease space that companies lease and don't need, and they're putting it on the market now. There was a squeeze on space. There was hardly any offices available just a few months ago. Now it's all coming on the market, and that's not temporary. This is companies deciding, we don't need all these people. We don't need all this office space. We can let people work from anywhere. And some companies like Twitter and others have made it official. The official announcement is a permanent trend for them. Facebook is heading that way. Other companies are more ambivalent about it, like Google. Apple probably will try to buck that trend a little bit because they're penchant for secrecy. But there's a lot of jobs they can switch to work at home. And once people figure out how much money this will save, not only the company but also the employee, how much time it will save by not having to commute, and people have figured this out now. I think it will be a generational shift in how cities are built, in how infrastructure is built, in what people do to go to work. What business trips. The whole thing will change based on that. Now that we have finally figured out how to get some of these activities online that we had to do in person beforehand.
What about outsourcing? Why hire locally? Is there a danger that jobs in North America could be taken over by somebody in India or the Philippines if you can just work remotely?
Yeah, I mean, that's work from anywhere. That's exactly what that means. You as an employee are now competing with some guy in India or in the Philippines who works for a fraction of what you get paid. And that's already taking place. I mean, that is a big business right now. Long before the pandemic, tech work has been outsourced to India and other countries in two ways. One is obviously to let the tech work be done over there and to bring it in. And the other is to bring this cheap labor from other countries in under our various visa programs, And all of these efforts have suppressed wages in the tech sector. And every older engineer can sing you a song about that. They've had to train the very Indian replacements, and then they were laid off. Now this can be done remotely as well. So there's a lot of development work going on in India. A lot of the programs are being coded in India and in other countries. Russia is really strong in that. It was really strong in that too. And it's a whole industry that has sprung up. So once you work from home, you're actually thrown more directly into this form of competition. And the only thing as a worker that you can do is to try to shine with your brilliance and hope that your company gets dependent on you. But this is a real problem in a globalized tech economy. It has been a problem for decades. The shift to outsourcing of this work to other countries is, that's well established. And there's Indian service companies specialize in that. These are very big companies, and the pharmaceutical industry has done the same thing. There's lots of industries that have shifted much of the work to other countries. In the United States, the auto industry has sent a lot of design work to China. GM has set up a huge design center in Shanghai, as have other automakers. So this is a process that's been going on for years. And yes, work from home, a trend in terms of work from anywhere will increase that trend, I think, further.
We'll have more with Wolf Richter right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Wolf Richter. Wolf, one of the other changes that's happened with the pandemic is very little airline traffic. Can the airlines survive?
There's already a whole bunch of airlines that filed for bankruptcy if they didn't get government support, and including some big ones. In the United States, so far, the major airlines have all gotten government support, and same thing in Europe. The major airlines there have gotten bailouts, not only from the government, but also the central banks have created a firestorm in the bond market by repressing interest rates and yields. And so now there's this huge chase for yields going on, and airlines have been able to issue bonds and get loans, American Airlines, United States Airlines, yeah. And so they have gotten a huge amount of money to burn through. But the situation is incredibly dire. So now they're all sitting, in the United States, all sitting on cash, and they're sitting on government bailout programs. But, passenger traffic has just plunged. And in terms of people entering U.S. airports to fly somewhere, so that's down by still down. As of right now, it's down by about 75%. And, it's a collapse in demand, that is very hard to overcome. Now, since we've had these outbreaks, of COVID in the South, there's a renewed decline in ticket sales. Delta has warned about it, and United has warned about it. Sometime in late June, early July, that trend started reversing, and ticket sales started going down again as people started worrying about flying anywhere, and there were some hubs where ticket sales fell a lot more than in other hubs. So Delta said that it will take at least 2 years before there's any kind of sustainable recovery. The whole picture is just incredibly dire, and it's dire also for the suppliers, for Boeing and the other companies that support airlines. The airlines have laid off a lot of people. That right now they're trying to, or they're successfully nudging people out via early retirement programs and other pay packages where they leave. Come October 1st, the bailout programs requirement that airlines don't let people go expire. And so United already announced a whole bunch of layoffs. American announced a whole bunch of layoffs to take place after October 1st. So we'll see, they're talking about tens of thousands of people for each airline. I mean, these are very big companies with lots of employees, and there's just no demand. And so they have to survive. They have to cut their costs. They've retired a large number of planes. When they retire these planes, they don't need the pilots. They don't need the flight attendants. They don't need the maintenance crews. So the whole thing changes. And so they're trying to survive as much smaller companies. And even if they successfully, downsized to that extent, they still wouldn't survive without government support and without central bank support. And airlines that didn't get that, like the South American Airlines, there's a couple of them that just were filed for bankruptcy. Then there's others overseas, and they cannot continue with this traffic pattern. Now, Delta announced that passenger revenues for the second quarter, so that's April, May, and June, was down 94% from a year ago. I mean, this is a collapse in revenues that's just unimaginable. So if it ticks up a little bit, and it's going to recover, it'll be down 90% or 85% or maybe 70%. That still represents a collapse in revenue that an airline really can't survive. And normally when the revenues drop 20-25%, that's a huge problem. But when revenues drop 90% or 80% or 70%, that's generally the end. And so it's going to be a life and death battle for the airlines all around. Travel is the slowest thing to recover. After 9/11, it took nearly 4 years for passenger revenues to go back up to where they were before. After the financial crisis, it took nearly 3 years. This is much worse than either one of them. 9/11 was just a few days. really of damage. The financial crisis was a broader form of damage, but it was just people not wanting to go anywhere. Now it's travel bans. We as Americans, we cannot go anywhere. We can't go to Europe. We can't go to Canada. You're just stuck. And airlines that normally provide the service don't have any business. It is very, very tough. And Warren Buffett sold his entire airline stakes, and in mid-crisis, when the stock markets was collapsing at a time when people thought he should have bought, but he knew what he was doing. That this is going to be a long-term problem, and there will be some major bankruptcies. The losses will be huge. They will just burn through capital to survive. And when they come out at the other end, they will have so much debt that it will hamper their earnings for years to come. So, if you're in the airline business, this is right now, this is a horrible spot to be. And I kind of admire their gumption trying to fight this out, because there's no real easy exit now. There's no V-shaped recovery in this business. There's hardly any recovery. It just hasn't happened yet. There will be a very slow recovery. It will take a long time. It will eat a huge amount of money, and it will cause all kinds of pain. And of course, at the other end, when the fleets come out with newer planes, more efficient planes, and trimmed down staff and so forth, the airlines could be in better shape. But by then they'll have so much debt that unless they file for bankruptcy to get rid of that debt, they'll be weighed down for many, many years.
Will we ever see a return to cheap or affordable air travel anytime soon?
Well, they're offering deals if you can fly, and if you want to fly, you really can't go anywhere right now. Except within the United States and in some foreign destinations, but the broad spectrum of flights that we used to have available is just gone, and they're trying to attract people to the flights that they do offer. They're trying to fill those up, so there's just not a lot of demand. So I don't think that they can raise ticket prices at this point.
And of course, it's not much of a great ad for the airlines that are currently flying when every day on the news now we're saying if you were on Air Canada Flight 173 from Kamloops to Edmonton, you were exposed to the virus, and they list 7 or 8 planes every day.
Yeah, that's part of the problem. And airlines are telling us that, it's safe inside of a plane, but there's a lot of discussion as to how safe it is when you sit next to somebody who's infected.
We'll have more with Wolf Richter right after this.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Wolf Richter. Wolf, with so many people unemployed, is there demand for cars? And are we going to get any good deals out of this?
So the good deals are here. And, the car market on the new car side has gone through a very difficult period, and sales have essentially collapsed in March and April. They have now come up. In June, in the United States, new vehicle sales were still down 27% from a year ago. And so part of that was the collapse in fleet sales. Rental car fleets, we had two big rental car companies that went bankrupt, Hertz and Advantage, and they're sitting on 1 million plus cars, the rental car companies in the United States, that they don't have any customers for. So they're not buying cars, and other fleets have cut back too. So fleet sales have collapsed by nearly 70% in June, and retail sales are not as bad, but they're still down about 17%. And so what we have seen in the last few days, and Tesla is a good example of that. Tesla just started selling its Model Y in March, so that is newest subcompact. I mean, a compact SUV, and it cut the price by $3,000 last weekend, because in the United States, because there was just not enough demand. And it cut its price of the Model 3 by $2,000 a little while before then, and it cut its prices for the Model X and the Model S by $5,000 each. So it has gone through a series of price cuts on its entire lineup, and these are big cuts, and that doesn't happen if you have plenty of demand. This happens when there's not enough demand and you need to stimulate demand. And it's a classic method in the car business. If you need to stimulate demand, you cut the price. Now, other automakers have done the same thing, except they don't sell directly to consumers like Tesla does. They have dealers, and dealers sell to consumers. So they have a franchise system that they're stuck with. They, under state franchise laws, they have to do it that way. And so they have come up with record incentives in June, and in the $4,500 range to move those cars. And they're also having finance incentives. So now the latest is 7-year loans with 0% interest, and on cars, on new cars. And they're all trying to stimulate sales. And of course, they also have a supply problem in that not all of their plants are up and running. They have supply chain issues. There's components from Mexico or from China that are not coming in. And especially Mexico is now a problem because they have a huge outbreak of COVID-19 down there, and some of the plants have shut down. And they have the outbreaks in the plants. So with workers getting really sick and dying, and so they shut some of the plants down. So now we're not getting the components in the United States to assemble the cars. So they're having these hiccups. So there's a supply issue and there's a demand issue. They're addressing the demand issue by cutting prices, and Tesla is doing that, and the other automakers are doing that. So everybody's doing it, and the fact that everybody's doing it shows that it's not a brand specific issue. It's not just Ford or GM. This is across the spectrum. It's Toyota. It's everybody, and it means that for car buyers, there are now some deals available. All right. During the biggest part of the crisis in March and April, the thing sort of froze up, and the incentives were pulled. Nobody sold anything, and the factories were shutting down, and so there's no supply, and everybody just kind of froze in place. So now the market is loosening up. Companies are interested in selling again. Plants are opening. Dealers are trying to make deals, and the incentives are hailing down. So, this will be a pretty good time, I think, to start shopping for a car. Now, I've heard stories that 2 months ago, people were trying to buy a car in the middle of the crisis, and they went to the dealer, and the dealer blew them off and said, "No, we're not cutting prices. We're not making deals." And now that's changed. So, there's some hot models that you may not be able to get a deal on, but most vehicles out there, the incentives on them. Now, Tesla doesn't give incentives. It actually cuts the price. You can see that on its website. That's how it did it over the weekend. It just lowered the price by $3,000 on its website, and there's nothing to negotiate there. But when you go to the dealer, you may have to do some negotiation to get those deals.
Wolf, thank you so much for chatting with us.
Thank you, Joe.
My guest has been Wolf Richter, publisher of wolfstreet.com. He was speaking to us from San Francisco. If you have any questions for Wolf or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.